Dutch Bros is being bought by the largest asset managers in the entire world. So we saw the Vanguard Group increase their holdings very slightly, and then we saw BlackRock increase their holdings by 2.3% over the past quarter. So not a huge jump in here, but it is good to see that BlackRock is buying more of the stock. And then also, when we take a look at T. Rowe Price, we see that they've increased their holdings by 6%. T. Rowe Price is one of the largest asset managers in the entire world as well. So the largest asset managers in the world are buying more Dutch Bros, which we'd like to see. What I'll do in this video is I'll go over some of the financials of this company. I'll go over short interest, and at the end of the video, I will give a price prediction based on technical analysis. So make sure you stay tuned for that. So also worth noting that Citadel increased their holdings by 77%, which we do like to see. Obviously, that's one of the largest hedge funds in the entire world, so that's good to see there. So Morgan Stanley did do some selling, but that's pretty much the general gist of the most important buyers and sellers for this stock. One thing I wanted to note for Dutch Bros is they aren't located on the East Coast whatsoever, but this is really a West Coast company. Obviously, there's some in the Midwest, but we have some in Texas and other states as well. But just wanted to kind of note how big this company is, right? For those that don't know, obviously they sell coffee, other kind of handcrafted drinks. So very popular company, very popular on the consumer side, right? There's a lot of loyal Dutch Bros users, right? So definitely think that plays into the large retail following that this stock has. So with that being said, let's take a look at this company's financials. So currently we aren't profitable, but we're projected to be profitable within the next 12 months. So within the next 12 months, projections are for this company to be trading at 140 times PE, which for those that don't know, that basically says that investors are willing to pay $140 for every $1 of earnings this company has. So definitely signaling that this stock is somewhat expensive on a valuation basis. Definitely got to be upfront and sober about that. But when we take a look at that valuation, we understand why it's trading at such a high valuation. It's because the growth is so high. So these growth numbers are very solid. So over the past 12 months, we've had revenue growth of 39%. And then over the next 12 months, we're projected to have revenue growth of 34%. So definitely signaling that this stock has pretty good growth metrics. So yes, valuation is expensive, but growth is kind of rationalizing that high valuation. And then when we take a look at profitability, we can see that they have a gross profit margin of 26%. So that's not horrible, right? For those that don't know, this is basically just revenue minus cost of goods sold. Tells you what a company makes for what it sells. So 26% is definitely a solid number for this company. And with that being said, let's take a look at the company's balance sheet. So the balance sheet isn't the best. So we do have $25 million in cash, and then we have roughly $780 million in debt. So that means that we have $750 million more debt than cash, which we don't love to see. But at the end of the day, this company is still in a pretty solid spot when you take a look at their balance sheet, because we do have net operating cash flow of $89 million. So their net operating cash flow is positive, which definitely signals that their cash burn isn't, horrible. And obviously, with the projections for growth to continue, I expect, the balance sheet to become less and less of a major issue for the stock. So, yes, we don't have the highest cash holding, but at the end of the day, when we take a look at some of the other peers, this is kind of a capital intensive business, so it's not shocking to see that this company has a significant amount of debt relative to cash. And then let's take a look at some of the short interest numbers for this stock. So we can see here that the company has 15% of its float sold short, which is definitely a good chunk of the company sold short. And then we have 7.7 days to cover. So for those that don't know, this days to cover number tells you what a company, how many days of average trading volume it would take to cover the shares that are sold short. So 7.7 basically means that it would take 7.7 days of average volume to cover the shares that are sold short. When we're looking at days to cover and trying to see if there's a high likelihood of a short squeeze, any number that's over 10 signifies a very high likelihood of a short squeeze. So we're roughly at 8 here. We're kind of rubbing up to that 10 threshold, which tells me that we're at a kind of B plus to an A minus for a short squeeze likelihood for this stock. And then taking a look at some other numbers here. So short borrow fee rate is at 6%. For those that don't know, that this is the fee that investors charge to lend their shares out to short sellers. So in exchange for an investor lending out their shares to a short seller, they're getting back 6% annually. The higher this fee is, the more expensive it becomes for short sellers to short the stock. So typically, the higher this number is, the more of a likelihood we're seeing that a short squeeze could take place. The average for this number is 0.3% to 3%, so we're nearly double that average short borrow fee rate, which definitely signals that the stock is somewhat expensive to short. And then, so I'll close it out there for the short interest. Let's move into the analyst ratings on Wall Street for this stock. So on Wall Street, there are 5 different investment firms which are bullish on this stock, and we have 0 bearish firms. So the general consensus on Wall Street is that this firm is a buy, which we do love to see, right? So 5 to 0 in terms of bulls to bears, signaling that Wall Street is bullish on this stock. And then let's take a look at the chart, right? So let's give a price prediction based on technical analysis. So we're coming down to test major support at around $22 to $23. This kind of buying range is where we bottomed out in May of last year. So I believe we could catch some support around this level, especially as shares are oversold according to RSI. So according to RSI, shares are oversold right now. Shares are also oversold in May of this year, which signals to me, that obviously after May, shares moved higher. So in May, shares were oversold. Shares moved higher after being oversold. That signals to me that we could see a potential move higher off of this oversold level, especially as we come down to test support. So definitely do think this level holds around $23, and we see a move higher over the coming weeks to days for this stock. And given that this stock, so also on March, we saw shares oversold, and we saw a move higher over the coming days after that. And then in December of last year, we saw shares oversold as well, and we saw the stock move higher. So in each of the last 3 instances where the stock has been oversold, even really the last 4 when you count May of last year as well. So the past 4 times the stock has been oversold, we've seen the stock move higher in the coming weeks. Therefore, I believe this stock will move higher off of oversold conditions as it has in its history. So oversold conditions coming down to support. I believe this level holds for the stock, and we see a move up to the 100-day moving average at around $28 over the coming days to weeks for Dutch Bros. So that is my price prediction for this stock. And with that being said, though, when we take a look at the financials, the company definitely needs to move towards positive PE, towards being a profitable company before I kind of put long-term money into this stock. Obviously, I think the stock has definitely a long-term opportunity and definitely could take advantage of this trend we're seeing towards caffeine, obviously. But like I said, I'm a bit of a safer investor. I would really like to wait until we see this company move towards profitability, towards consistent, multiple quarters of delivering positive EPS. So with that being said, I hope you enjoyed the video. I will end it there.
If you got some value from this video, please leave a like. We post company breakdowns and important market moving news on this channel on a daily basis, so make sure you are subscribed. If you would like to receive my daily portfolio moves, my exits, my entries, and see how me and my team of analysts are trading the markets, join the Discord through the link in the description below to get our free 7-day trial. Also, if you would like to join our free daily newsletter, sign up to our Substack, which is linked below as well. With that being said, good luck, everyone. Happy trading, happy investing.